All right, back in the saddle, Greg.
Here we are.
Here we are. Okay, so here we are, Greg. This is the third session of the weekly update. Different, feels like we're almost in a different world these days since the new year. It seems like there's been a lot of changes in the financial markets, really. It's kind of coming into its own, like almost like a new chapter in finances. Or has this all happened before? Is it just one big cycle? How have you been lately, Greg, in the new year?
Firstly, I've been well, thank you. It's nice to get a few days off in the new year. No, I would say this was expected.
Okay.
I think when, what we've seen over the last year, or should I say the last few years, especially in the stock market, in Bitcoin, the rest of the crypto complex, we've seen sort of one-way markets, and we've only about 6 or 7% off the all-time highs in the S&P, maybe a bit more in the Nasdaq, and people are calling the end of the world, the end of the bull market. And I must be honest, this is just to me a standard correction. I'm still expecting higher this year, but with that being said, I do not believe this current correction has run its course just yet.
So that is actually a perfect segue into what I wanted to talk about. There's a couple changes since last month. So gold is sitting at 1838. Had a bit of a nice move yesterday, and seems like it's going to be going not too bad, really, like up and up and up, which is nice. Silver's sitting at 24,000. $24.30. What are your expectations for the metals markets currently?
Well, again, I can't say I'm surprised. Last time we spoke, I was incredibly bullish the metals from the $22 region in silver and from the low 1700s in gold. And we're actually now approaching a very key region. And the reason I say that is, yes, my expectation is for much higher in metals. I expect metals to be one of the best performers this year, but we are at an inflection point. So the easy trade, or the trade that we called from the $22 and the 1700s regions in gold, we're now at an inflection point where if this is the real move, we should start to see acceleration in both. And I'd like to see silver up towards the $28 region and gold up to the $1980 to $2,000 region. However, I must stress that with the structures that we have, it's not a given scenario. And what I mean by that is we're at resistance now, where we're either going to confirm my thought process or confirm that the metals bull market has started, or if we get rejected in this region, we could still see gold back to the low 1700s and perhaps even lower, and silver back towards $19.5, $21 region before the real move takes place. So from my mental room, we took profits yesterday. By taking profits, I mean not selling all of it. We sold a portion of it. And the reason is, obviously, we're sitting on very big gains from those lows, and we're at an inflection point. So it doesn't mean that I think the market's going to go down, but I'm acknowledging the fact we're at an inflection point where if we don't break out and confirm the bullish thesis, we could still have one more turn down before the real move takes place. For longer term investors, I don't see any problems with the metals charts, whether we take the direct route and break out from here, or we do loop down one more time. I'm still expecting higher prices. So from a trading perspective, it made sense to lock some profits in as euphoria is getting going here. But I do acknowledge the potential is there for the direct break higher. But due to the inflection point, it was prudent to take some profits.
Nice. Loving to hear that members are taking profits. That's Christmas, really. It's perfect. You mentioned the S&P. I had a look at the TradingView charts before, and hasn't really seen a dip like it has recently since September 2020. So obviously, like, COVID was in full swing. S&P wise, you looking pretty bullish on the S&P, or a little bearish?
Let's take that a step back. I definitely would not relate this current pullback we've seen to anything like the Corona drop.
Okay.
It's a massively different scale. I mean, we're 6-7% off the all-time high. It's hardly a massive drop. From a technical analysis perspective, I would have loved to see one more high towards that 4.950 level. However, we did top out a little bit short of there, which is, I can't say something that was a surprise. It's just we did top out at just below the ideal targets, which we mapped out from the 4344 originally support. So coming back to where we are now, I do just find this, from me, I've got this as a wave 4 in the bigger picture, a wave 4 of the bigger wave, so micro wave 4 of the bigger wave 3. And I am expecting, although a bit more of a top-turvy year than the sort of straightforward action we saw last year, my targets to the upside still maintain above the $5,000 level. Where does this current correction end? Well, it depends if we end with a shallow or deep one. From a shallow perspective, I was looking at around the 450 level. From a deep perspective, we could go even as low as the 4.1, even potentially a tiny bit lower. But again, my plan is to use this wave 4 to be looking for swing long positions for a move above 5,000 this year. So I am expecting a bigger range this year. I do think we'll see that volatility, but ultimately I am expecting all-time highs once this correction ends.
Very nice. Nice to hear all-time highs with the S&P. Just to cross off the whole market, we'll talk a little bit about crypto. So mainly the two ones that I wanted to mention was Bitcoin. This time in November, it was sitting around 60K, down to just about 40,000 US dollars these days. And Ethereum sitting at 29,000, just below 3,000, so 2,900, which could almost be indicative of the larger crypto market. Bitcoin moving around. What are your opinions?
I think Bitcoin's frustrated a lot of people recently with the lack of action. We've been very much stuck in this sort of 39.5 or 39, call it 40,000 to $43,000 level range for quite some time. And what we're seeing now is, yes, sort of sentiment turned very sour, even though the market hasn't really done anything. So I don't find that as bearish at all. Bitcoin and Ethereum, I'm ideally looking just for one more low to complete this correction. Bitcoin, I've got two levels of support depending on which count, but one is at 37 to 39, which has been on my chart for a significant amount of time. And ideally, with the recent weakness, we could see a direct flush there, but with the range we've had for some time, it's possible we hold these lows and push back up again. But ultimately, I'd like to see at least at $37,000, $39,000 level hit. And I've got lower support if we do get a washout, which comes in between the $25,000 and $30,000 level. So I'm looking for that 37, 39, see what happens around there. If we can hold support there, we could feasibly have a long-term bottom in play. But breaking below there, we could see a scary wick down to that 25, 30,000 level, and that will certainly cause a lot of panic.
Ripples.
But ultimately, yes, I'm still expecting another high in Bitcoin before the market cycle tops out. So I do believe this weakness to be opportunity, but we're not quite there yet.
Yeah.
Looking at Ethereum, it's interesting. We had a breakout on the Ethereum Bitcoin chart late last year, and what we've seen since then is backtesting that breakout. So I still maintain further strength in Ethereum as long as we can hold that breakout against the Bitcoin chart. Looking at the US dollar chart, to me, very similar to Bitcoin, ideally one more low, and I've got support as low down from 2.3 up towards the 2.7. 2.7 would be my ideal region. 2.6, 2.7 level would be absolutely ideal, but we could feasibly see the lower support, the 2,300 level hit. And I must stress, although not my expectation, but if we don't see an impulse form from those lows, we could even head as low as the 1,900 level. But that's not my expectation, but if we don't get the reaction I'm looking for from the support zone, that is not out of the question. But ultimately, I expect the 2.3, 2.7 level to contain this. And, ideally with the 2.6, 2.7 upper support does hold this.
Nice. So just to finish, I guess, the market updates before I delve into the mentor room questions a little bit. Market corrections, I've heard almost described as a soft entry bed for new participants in the market to enter at a level where the markets are lower and presumably expected to raise back to a normal or even a higher level. What would be maybe something for newer traders to keep in mind when they are thinking about entering just as a market has corrected. A lot of people entered just as the coronavirus was hitting and the markets were lower, and they might have seen exponential raises really quickly, and few people could be experiencing the same kind of trials and tribulations these days.
Yeah, well, I find it quite funny is that people tend to wait until they FOMO into the market. Personally, the way I trade, I buy support and I look to sell resistance, so I like to buy low, sell high. I know everyone likes to, or thinks they do that, or attempts to do that, but often it's once the FOMO euphoria hits. So unfortunately, a lot of people would have bought at the hype towards the top of end, and they will end up panic selling at the lows. And that's where the emotional part, right, comes into it. So I think a lot of newer traders are really struggling to comprehend what's going on. And again, it's such a small correction so far. But because for some people who entered around the corona lows, or after a bit of a move higher from there, they've only seen one-way action in a market. So they think something's wrong with the system. How can the market drop? But throughout history, you don't go one way in any market. And yes, we've had an incredibly strong bull market. And yes, I do not believe the bull market is over just yet. I still think there's at least another high, as I said, into the 5,000. Ideally, two more, what I call 4 5s, could take us up to 6,000 even potentially. But yes, this correction we're seeing is normal. You cannot go up in one way all the time. And I think a lot of newer traders are certainly probably struggling with this, thinking this is such a big move, or if they heavily leveraged, might find this abnormal, but it really is just a standard correction so far. And again, I can't be wrong. This might turn into a full-blown crash and full-blown breakdown, but I don't see any signs of that just yet. And until any significant support breaks or any signs of that, then I'm treating this very much as a standard correction within a bull trend, which has not completed yet, in my opinion.
Nice. Mentor room. We talk a lot about the kind of value that you give to mentors and that mentors give to any trader, really. I think it's kind of unanimous a decision that traders need a mentor on their side to help them, at least at the start, to kind of get a direction and to find some sort of a bearing. But I wanted to touch on the value that you get personally from being inside a mentor room. There's a lot of discussions inside your mentor room, and I know that just discussions, bouncing ideas off people can really kind of come to a beautiful understanding of the market. So I would want a few words of the kind of personal values that you gain from running a mentor room.
That I gain or that I give?
No, that you gain, really. So
right.
It's a two-way channel, really, and I know that you get a lot from the mentors that are in your room.
From my members, yes.
Yeah.
You're right.
Mentors. Members.
You're right. When you look at it, and I look when we sort of started out, I was the mentor. I still am the mentor, but I was the guy with all the knowledge, and that knowledge has been passed on to members. And you can see some of the members in the room, the analysis is just unbelievable, and to see some markets, there were 2 trades yesterday actually, where members posted some setups, and they were for symbols that I don't usually trade or regularly trade, and they were just great setups. So yeah, I certainly get that. I get the, some markets that I don't look at. I see some members work, and I can certainly trust it or point in a direction, and I look at it and it's bang on. So we've got some members who are just unbelievably talented, and how quickly they've picked it up. It's really, really impressive. And the work they're producing, the profits they're making at the moment, which is always amazing to see. So yeah, I get that a lot. Setups that I would normally look at. And I also get my work challenged, which is always good. When you have your analysis challenged, I look at it and, member will go, well, why do you have that? Or why are you doing that? And I've got to rework through it to make sure it's correct. And there was one last week where I actually made an error on an Ethereum chart, I think it was. No, it was ADA.
Okay, yeah. That has been moving a little bit recently. It's kind of...
So we'll get on to that because we have to speak about it. I was on ADA, it was a chart on ADA, and I was looking at the internal structure, and I posted my chart, and a member pointed out, this shows you how on the ball they are. Where I put one of my waves was actually an invalidation. The sort of subwaves, the microwaves, wave 3s can't be diagonals, need to be impulses, and I've shown it as diagonal. And, it was pointed out to me, and I re-looked at it, and I was like, well, yeah, you're right, okay. And, then I went and re-looked at it and worked it out. So, yeah, I do make mistakes. I'm doing what, 50, 60, 70 charts a day at least, or at least 40, 50 a day, probably more. Sometimes I am going to make mistakes on the, especially the subwaves of a chart. And yeah, so that got pointed out and I immediately corrected it. So, that sort of thing is always good. And you can always see, what I really love is you can see where members are at as well and how they're progressing, and, that hunger that they have. We do sort of a new thing we incorporated this year is a weekend chart. So it's run by two of the members in the room. They post the chart to study on the weekend. And what I do is they all try and they post their workings. Then I post my answers on the Monday. I do a video showing my chart and my work process. It just helps members to really learn or to improve their charting. And last week there were 3 members who got the chart totally spot on. And actually I had issues last week recording it because I'm having issues at home at the moment recording. So I did a live video of it instead of the recording last weekend. And the 3 that got it right were all in attendance at that live video. And that just shows you, even though they got it right, but spot on, they knew what I was going to say, because that's exactly what they charted, just in more detail. But that attitude to still show up and go, right, I want to see if I can pick anything else up from it, just shows you the mentality that we have in the room at the moment. So really impressive, really happy with how it's going. Members, constantly posting returns, doing well for themselves despite the world-ending drop in the stock market and lack of action in Bitcoin. And then obviously the cherry on the cake was us locking in profits on this metals trade that we took late last year. So yeah, I can't complain. So far, so good. Happy members, happy mental.
Great analogy for life. So a little bit about the trading strategy. I was wondering whether or not each asset can be traded with a similar strategy. So for an example, can you apply Elliott Wave to any product under any asset, or does it come down to different assets and the different amounts of volatility they all carry, or just the different trends that particular assets might be in? What is your theory about applying the same or similar trading methods to different assets?
So Elliott Waves, by its design, can be applied to all markets where there are or is liquidity. The less liquidity in a market, the less accurate it's going to be.
Yep.
So essentially what you're doing is you're applying, it's sentiment based. So if you've got participants, then it factors that sentiment into place. And it's off the sort of premise that, well, markets are fractal in nature, but also off the premise that humans put in the same situation will repeat the same things over and over again, so you get the repetitive patterns within the marketplace. So yes, it can be applied on all time frames to all asset classes. With regards to the difference between asset classes, sure, there are small differences. Again, I apply Elliott Waves. That's the framework I use, but I apply that within a FIB framework. So I've got set structures and methods on, entry points, exit points, where to take profits, where to stop loss, where you're wrong, how to manage the trade. Sort of, it's a whole process. But certain markets have certain characteristics. So Bitcoin gives deeper wave 2s and shallow wave 4s, and Ethereum generally gives shallow wave 2s and deeper wave 4s. And
so that's something you kind of get to know the asset as you work with it?
So I know, for example, when metals are truly bullish, obviously very shallow retraces, so towards the 0.5, sometimes 0.3 or 2 for a wave 2. Whereas when they're not in a true bullish phase, we actually tending to see a lot more sort of deeper retraces in both. So those smaller characteristics you pick up as you get more familiar with the asset, but the general premise stays the same, and the same setups appear and the same setups I take. So yes, it can be applied to all markets, all time frames. The more intimate you become with the asset, with the instrument, should I say, the more you can refine that slightly.
Perfect. Very last question before we wrap it up and do a bit of an outro. We had a comment on the last update video about news trading. Now, we know that you're, I see the smirk, and we know that you're a technical analysis trader, and don't give a huge amount of weight to news trading and to general news hype. Like it can be all willy-nilly. But I was wanting to pick your brain about different levels of news trading, or whether or not your strategy does change around any announcements, and what could be something that does kind of force you to take a step back into pause trading, if there is anything in that kind of.
So the important part to note the difference between trading and investing. If you're investing and you're looking at something from a fundamental aspect, fair enough, but you're not taking time into account. Okay, when you're trading, because something could be fundamentally good and strong, it can still take a year or 2 years to go higher. It can still drop or can move behind. So you can't trade that on the news because you're going to get stopped out 100 times, or you're going to trade without a stop, and then if it doesn't work out, you're going to lose a lot of money. So yes, there's a big difference between the two. From a market perspective, is there any news that would make me change my mind or something I can think about? No. It's very important to acknowledge the difference between a news event and the actual substance of the news. News can act as a catalyst. So when you have the FOMC, the markets can move, and that can be the catalyst for the market to move in a direction. So yes, I'm aware of the big news events. Do I care for the actual substance of the news? No. And let's give a great example. Most recent example, we had the FOMC come out, Powell was super hawkish, and the S&P rallied $200 points off the back of it. Gold rallies, all assets rallied, dollar got sold off, and it was like, well, how does that make any sense? Okay, the FOMC was the catalyst, and the market did the absolute opposite of what everyone thought or what Powell said. He was hawkish. No one could deny he was hawkish. But it gets even better. Then the minutes come out a few weeks later, and the minutes are still hawkish, and then the S&P drops all the way off. And then you start hearing that the traders got it all wrong. They were confused with what Powell said, and then the minutes came out and they realized they were wrong, so they'd sold off. I mean, just get your mind around that. Like, it's just ridiculous. It's so crazy to think that that's what happened.
Almost like the news was following the market sentiment.
All the traders suddenly thought that they were wrong and they misinterpreted what Powell said, and now they've all gone bearish, they've sold. It's absolute nonsense. It was another catalyst that came out, and the market decided to sell off then. After it had hit a new all-time high and achieved the minimum expectation for the move higher, then the news comes out and the market sells off. And, let's go back to another example. Let's look at the crypto market. Look at Bitcoin when it was in its heart of its third wave higher last year, and Elon Musk was tweeting that he has to sell some, or he's going to sell some. The market totally ignored that and continued higher. Fast forward when the market had completed the upside pattern and was in a corrective pattern, and he added that he's now worried about Bitcoin because of its emissions and the electricity it uses or whatever it is. And then the market sells off. Everyone goes, oh, Elon Musk, how can you do this to us? You're breaking the market. And it's just, well, he did something, he said the same thing or even worse a few weeks before, months before, whatever it was, and the market ignored it. But now that the market's in a bearish trend, it sold off the back of it. So again, it's a catalyst, it can act, but how the market reacts around the news is totally not as straightforward as people make out. Look at earnings. You get good earnings, the market sells off. You get bad earnings, the market goes up. You also get good earnings, the market goes up, and you get bad earnings, the market goes down. It's very much just the way the markets are, and I think we as human beings get very much sort of drawn into it because we open the newspaper, or these days we look online, we read the news articles, and we're getting all the news. We're getting all the reasons of why the markets are moving, which most of the times are absolutely nonsense, and they're just lazy journalism repeating the headlines. So yeah, if you're a news-driven trader, I think I'm going to say, I don't think anything's impossible. This is about as impossible to make gains in these markets. It's just not going to help you. In fact, it's going to hurt you, in my opinion, because you're going to form these bearish or bullish biases based on these articles, which aren't even accurate reflection of what's happening in the marketplace. So yeah, I maintain as a trader to make money trading news headlines is just
not the way.
It's just, yeah, it's, again, I hate to say impossible, but show me a news headline trader that's made money in the last 5 or 6 or 7 years, and
we'll show you a liar.
Right.
We're coming for you, news traders.
I mean, unless you're an investor. Again, if you're an investor, I've got no issues with fundamentals. I'm not an anti-fundamental guy. In fact, I studied finance. I studied economics. I've given talks on the fundamentals of market hypotheses, whether they're efficient or not. I've given lectures on this. It's not like I don't know it or understand it, but you just, as a trader, cannot trade off that sort of information, in my opinion.
Very nice. All right, so that's it. We're just about at the half an hour mark, so we'll do a bit of a wrap up. We're doing these weekly updates, so stay tuned for the next one. Give us some topics. We got a couple nice comments on the last one with some topics, and we covered off one of them. We got one to go on the next session. Greg, we're doing Discord live streams on, is it twice a week, or was that just this week that we're doing?
No, that's in my private room. We do one on Thursdays, Thursday afternoons. Still may play around with the time. But every Thursday afternoon, we do one in the main Global Prime Discord room.
Very nice.
Which myself and Jem will be leading.
Perfect.
So
nice.
Feel free to join.
Come in, join the live discussion in our public Discord. It's a great spot to hang out, and you can kind of get to know the traders and get to know the team here at Global Prime. That's a wrap, guys, for the weekly update. We'll see where the market goes in the next day or the next hour. We'll keep up to date with it. I think that's a wrap. Thanks, Greg.
Thanks, Lucky. See you soon.